Welcome back, and joining me now to discuss more about commodity space is Preetham Patnaik and Kunal Shah. Both of you are welcome on the show. And Kunal, let's start with you. And we left the previous discussion at precious metal prices, and gold and silver seem to be closing this year in the positive in the rupee terms, not so much in the dollar terms yet. But going forward for 2023, which one would you pick on, and what are your targets for this year? Kunal, you're on mute. Kunal, you are on mute. We can't hear you.
Yeah, so extremely sorry. So we've seen that in the previous discussion, the major point was there is a lot of uncertainty. I think the macro, which is going to drive the market. So when it comes to the geopolitical tension, we don't know what is going to happen with Russia and Ukraine, whether it is going to escalate further. China, US, Taiwan, that issue is going to escalate further. But it seems that the geopolitical tension is going to increase rather than decrease. So that is the number one case to hold gold right now. Second is regarding the monetary base of most of the Western central banks. What they've done is they've expanded their base like anything. They are cutting down the balance sheet bond purchase program. They are selling bonds in the market. We've seen almost $400 billion of redemption by them. But in spite of that, the inflation is relatively very stickier. Going forward, I think the major concern is the pace of rate hike is going to be moderated. And later during the year, sometimes, maybe second half, we are going to see that even the QT which is going on will stop at some point. And they will talk about, rate cuts after that. So we are in a vicious cycle right now. And in this vicious cycle, gold is going to be your best friend, because everything which is happening in the world is positive for gold. So it is very difficult to predict the long-term target for the gold, but it seems it is going to break its all-time high, and it is going to move up quite significantly from here. So my high conviction strategy would be going long in gold and silver. Gold next year, conservatively $2,000. Silver conservatively next year is going to test $28 to $29 or perhaps $30. So these are my high conviction ideas for 2023. And I would say precious metal is going to outperform many asset classes going forward.
All right. It already seems to be doing that in the last 1 or 3 years, and perhaps could continue doing that, is what Kunal's saying. Let's talk about the base metal prices then. And we have seen gains come back into this one. If you look at the last 1 month, most of the metals actually are trading in a positive side. Preetham, would you say that's how we will enter 2023 as well? And what top picks would you have in the industrial metals, base metal prices?
Manisha, honestly, we are a victim, or we are a slave of what China does. Unfortunately, that's the most opaque country to get data from as far as economic data goes, or anything to do with COVID. So that's going to keep the market interesting. So there's going to be a lot of volatility for traders over there, needs to say. But my sense is that, we've seen that any positive news that kind of comes from China, it tends to overtake any negative news which is there relating to, recession or the likelihood of US markets, all the global markets going into this.
Okay, so clearly China is going to be quite important there, and well, yes, he rightly put that we are slave to China when it comes to industrial metals and various other industrial agriculture commodities also, for that matter. Kunal, what is going to be your top pick when you look at the base metal prices? Because most banks seem to be still putting a lot of faith when it comes to copper and aluminum for the next year as well. Iron ore seems to be yet another gainer there.
Yes, when you talk about the upside, potential upside, it is only because of the China opening up. We have seen the Chinese demand contraction lasted from almost last 4 months, and that remained prime reason why metals were not able to outperform in last 4 months. But now, if China is opening up, there is going to be, the word they use is revenge demand. So 4, 5 months, 6 months of slack demand, suddenly liquidity pumped in by the government in the real estate sector. Again, the old model of economic growth starts taking in. So this will lead to some revenge demand in the market, but it is a short-term phenomenon. So in a first half of the year, yes, like you rightly said, copper can still move up, can surprise everyone and test levels of 9,100. But I am not very bullish because at the same time, when this revenge demand, the moment revenge demand fades, the overall housing market of China is not going to recover the way it used to. So not very optimistic, but yes, in first half, we are likely to see copper can edge up and test 9,000 to 9,100 US dollar.
All right, so still putting all the faith in copper, not all-time highs perhaps, but a good rebound from these current levels right now. Preetham, sorry, we lost you. There was some technical glitch there, but you were saying, and what is your favorite metal out there?
So out there, I think it's copper. Reason being, apart from demand, there is also constraint in supply. You see inventories are running low across the globe for copper. Mining out, if you were to see the trends or the trends that miners are putting out, are also saying that the output is going to be significantly impaired in the coming year. So I think that is going to help copper prices to be very strong. For the next coming year, financial year, calendar year, what I mean to say. And my sense is that currently the first level that I look at is around 730 levels in Indian rupee terms, and then the next could be even in excess of 775 to 800 rupees.
All right. So copper continues to be the top of the pick there, and yes, the fundamentals are strong. Apart from construction, it also is about renewables, 5G, the green energy. All of that is something that requires copper, and that continues to be in the hot seat there. Let's talk about energy there, and because India imports more than 80% of its requirement, this is one area that is watched with keenness. And as Guy was mentioning earlier as well, other commodities may not be so much of a case, but when it comes to energy, it does disrupt your budget in more ways than one. Kunal, how are you looking at the crude oil prices? Because as I was mentioning, $65 to $110 of an average price is what banks are putting out for next year. What side are you bending?
First, I'll explain the fundamentals and then I'll give the price outlook. The fundamental of oil right now is not very bullish. The reason for that is the production cut which OPEC did announced in the month of October, November, and right now the status is that oil market is in a surplus of 1.5 million barrels per day, and with OPEC did production cut of 2 million barrels, out of which only 1 million barrels of production cut took place. So this is a market with a huge surplus every day building around. Second, now coming to the main point. Now, what is going to be the role of OPEC Plus going forward? I believe that somewhere, in the month of January, February, I think the meeting is in February, they would realize that this market requires production cut, and eventually there will be a cut. So the moment that cut comes, you will see some pullback. But the fundamental of oil is not looking very lucrative. I would still stick out my neck and say, yes, it can test $65, $66 for the WTI, $70 for the Brent. And on the upside, the maximum upside for the Brent would be 84, 85, and for WTI, it will be maximum till 80. So this is the range what I'm expecting broadly. And looking at the way the global economy is likely to slow down in the first half of the year, the likelihood of major rally in oil is very less. If there is a major production cut announced, then only it can rally. Apart from that, I don't see any real reasons why oil should really rally and test $100 or something like that.
All right, that could really be good news for a consuming country like India, where our rupee, our import deficit, everything depends on crude oil prices there. Preetham, how are you looking at the natural gas prices? Because that has also lasting impacts, and we've seen a big volatility and a big range onto that one. How is 2023 looking to you?
Unfortunately, the most difficult thing to predict today is the weather, because obviously La Nina factor has been changing the weather patterns across the globe. When we started off last month, there was a lot of talk about saying how hot this winter season is going to be, and lo and behold, we saw natural gas prices tumbling, and then it recovered because obviously they are seeing much more colder patterns. So this is going to be very difficult to play out. But my sense is two things. I think that globally, one thing which people have digested surprisingly well was the Russian news, right? I think Russia supply has been factored in. Now with winters very much being there and people factoring in what is going to be the requirement, my sense is that natural gas is going to find it a little difficult to kind of trade in excess of this, in Indian rupee terms, about 600. I think 580, 600 is a very strong resistance in Indian rupee terms My sense is that to breach that, there has to be something more significant. But I don't see anything on the cards per se to say that the trend is going to be very, very bullish in the coming years. That said, I reserve my judgment because you can never say the global economic conditions as well as the geopolitical conditions are so volatile these days. You can never know. You can always have a surprise. But keeping that aside, my sense is that there is going to be an upper carpet in natural gas.
Okay, so a definite buy in precious metal prices and metals. Copper is a top pick here, and the energy prices could see some decline, but volatility absolutely is something that is going to be the name of the game in 2023 as well. Preetham, Kunal, thank you as always. And with that, it's a wrap on this edition of Commodity Champions. We keep tracking all the action in the commodity space and news on CNBC TV 18 right here.